So in 2014, to get 5% growth, you don't actually need to grow much, because the base moved up. See, this is when you look at GDP growth, you look at the average of all these lines, and this is you here, and you compare average to average, and this is 5%. And the base just moved up very late in 2013, and that gives you statistical growth of 5%. Early year, we had some, momentum was lost. Growth momentum was lost. There were some signs of a pickup in summer. I think the last month, two haven't been that strong. But even then, with flat GDP, we're going to get to 5%. So most likely growth, if anything, is maybe even higher, slightly higher than 5% next year. Good thing, if you look at the year-on-year data, and that's for the first half of the year. Good thing is that, see, last year, 2013, what took growth down was investments. Investments came sharply down. But this year, I'm sorry, this is almost the same color. But this is investment. So investment has been driving growth. So that's a good story. And yes, and Nia's reminded me is because investment could be government investment or private investment. And if you look at the composition, it's been more private investment. So this is a good sign that confidence has come back. Maybe not that strong, but it has recovered. Georgia doesn't trade much with the United States. It trades a lot with Turkey, trades a lot with the Eurozone, it trades a lot with Russia, Ukraine, the region. So you need to look at other exchange rates. If you look at other exchange rates, again, 1 year horizon, lari is doubled in hryvnia. It's 60% appreciated to the Russian ruble. It's been stable to the Armenian dram and the Turkish lira. Right? So you need to factor these things too when you look at the exchange rate, not just look at the dollar. I know people look at the dollar because people have deposits in dollars. Financial sector is dollarized, but the real sector, the real economy, doesn't trade much with the United States. There are not many American tourists coming to Georgia. It's regional, it's euro area, and this is why for the real economy, those are the exchange rates that are more important. The lari has fallen by about 11%, but euro has fallen to the dollar by 9%. Turkish lira by 9%. Hryvnia to the dollar fell by 47%. Of course, there is a crisis there. Russian ruble 37%. But look at all these currencies. I mean, this is Hungarian forint, Polish zloty, Czech krona, Brazilian real, Korean won. They have all fallen by about 10% if you take 1 year horizon, right? The reason this recent decline caught a lot of people off by surprise is that if you just look since November 1st of this year, or even November 19th when the lari started weakening, most of this decline happened in this short period of time. Other currencies have been moving earlier. They have been declining, weakening earlier. And lari has been just very strong in spring and summer. And if you ask me, I don't know why it was strong. Probably the tourism season was strong, or there were other inflows that explain why lari was strong. Right? So instead of adjusting or floating down gradually to the dollar through 9-10 months, just like other currencies have been doing, lari kept strong, and then when the remittances started weakening, exports maybe started weakening, the adjustment has been more rapid over the last 3 weeks. We had very strong growth since 2004, but if you look at unemployment, poverty, they haven't improved. Right? If you look at other countries, it's similar. Maybe more problematic in Georgia, but many other countries have similar problems. Strong growth, but no unemployment doesn't change much. Poverty, same. And in the region, youth unemployment is high. It's also high in Georgia. It's close to 25%, and unemployment in the region is above 10%. So the question is, not only we need growth, we need policies to get growth going, strong growth, but we need policies so that this growth creates jobs, and that makes it even more difficult. For Georgia, key is going to be education. Georgia doesn't have resources, natural resources, so its resource is its people. And Georgia signed, the CFTA association agreement. It has access to a very large market. It maintained access to the Russian or this former Soviet Union market, which is good. But to be able to be competitive, Georgia needs better quality of its workers, and that means education. If you look at the education quality, see, this is Central and Eastern Europe level. Georgia is below Central Eastern Europe, and these are the economies that Georgia must compete. Not only Georgia is below the Central and Eastern Europe, some indicators like higher education, Georgia is below Caucasus Central Asia average. So this is a problem that needs to be fixed. What are the reasons? First of all, spending. If you look at public spending as a percent of GDP, Georgia doesn't spend as much. So if you look at, again, Central Eastern Europe, they spend close to 5% of their GDP on education. Georgia spends about 2%. So the latest budget that was set to Parliament, it increases spending on education. It essentially higher salaries to teachers and better quality of schools. Now, the only thing is that you cannot just solve the problem by spending more. You need to reform the sector. So when it comes to education, maybe some of you know, but it looks to me, and our core area is macro and financial policies, but it looks to me that when it comes to primary education, there are probably too many teachers in Georgia, many teachers who are very close to retirement, and that creates lots of challenges. And so the sector needs reforms, to more money, but also reforms. What you need to do is that you need to increase salaries to teachers so good people, high quality people can go and teach. We are all economists here, right? But the economy, if you look at the economy like Georgia, and I come from the region too, and I can see this when I go back home. It lacks. There are economists, there are lawyers, politicians. It lacks engineers. It lacks physicists, chemists, biologists. These professions have when the Soviet Union collapsed, they were no longer good professions, and a lot of people stopped. The good, bright students didn't go to these fields, and now you see economies needing these people, and this is true for Georgia too. And as Georgia wants to compete, this is where more effort will need to be. If you look at countries, this brain drain has been huge. Many countries, but you can overcome it. I mean, you see, like in China, more and more students, if anything, they're going to the US getting educated, and now they're not staying in the US, they're coming back to the to China. Same is happening increasingly in China, in India. Turkey is another case, people coming back from Europe. So there in Latin America also, there are some cases, in some sectors at least. So it comes in parallel, and you will lose, obviously. But you have no choice. You cannot just say, well, because I have brain drain, I'm not. You have no choice. You have to invest in and this is future, and especially for Georgia, because Georgia doesn't have, again, natural resources. That's the only resource it has. It's people.